One thing I'd recommend is even if your entity doesn't own Bitcoin yet or hasn't worked with Bitcoin, at a personal level, it's worth experimenting with. It's worth researching it, understanding how it works, and actually trying it, because that's what addresses that intangible aspect. If you interact with a mobile wallet or interact with a hardware wallet, if you send it to someone else, if you receive it, if you use it in an application, you earn it from playing a game, or you tip someone over Nostr with it. It can kind of open your eyes to the power of the technology. It's, a lot of analysts, when they look at it, they just see it as a price line on a screen. And it seems very intangible. And, they might not be able to differentiate at a technical level what makes Bitcoin different than Dogecoin, for example.
Macro guru Lyn Alden suggests that people are starting to recognize the unique value proposition of Bitcoin, particularly following the collapse of several regional banks this year. During a recent Microstrategy World Panel session, Alden states that Americans are beginning to realize the inherent risks associated with banks, which she highlights as something that the rest of the world already understands. Alden believes that many individuals took for granted what others have long recognized, that banks carry risks, especially if deposits exceed certain insurance limits. Depositors lend their funds to banks, which are then invested in various assets. However, the majority of people do not take the time to study these assets, as they are often not publicly available for scrutiny. According to Alden, the current banking crisis is opening the eyes of many investors to the value of Bitcoin. The macro guru highlights a few fundamental properties of Bitcoin that make it an attractive store of wealth. The risks prevalent in the banking sector are reinforcing the narrative around Bitcoin, emphasizing the ability to self-custody assets, hold assets that cannot be diluted, and possess assets that are not liabilities of others. In an interview, Alden commented on how these issues strengthen the narrative surrounding Bitcoin. She also discussed the future of Bitcoin and its potential integration into various industries' day-to-day activities.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Over the past several decades, there's been a lot of fintech activity, obviously, a lot of companies spinning up around fintech, and mostly what they do is they provide overlays on top of the existing financial system. So they're not really changing things from the root layer, but they're making the way that we interface with the financial system a little bit more convenient, faster, making use of software, making use of new technology. And I think what the importance of Bitcoin is basically a computer science breakthrough that changes how we interact with money at the root layer. Basically, it's open source money, it's global money, it's decentralized money in basically a cloud. You can access it around the world, you can send it around the world, and that's a very powerful concept that is very different than decades of basically fintech innovations. And if we back up further, the way I would put it is that for centuries, most of banking has had two major functions. One is the provision of credit, and the other one is basically about making money faster. Right? So, for a long time you had gold as kind of the base money, and then for centuries you had various kind of proto-banking technologies to make the movement of that value separate from having to actually move and verify gold every time. And so what they shared in common was that it always relied on trust. There was, the Hawala system was active for, 1,000 years or so. There's bills of exchange that are written on papyrus. There's bills of exchange written on paper across the Silk Road. Islamic merchants are thought to have brought banking to Europe eventually, to Venice and places throughout Italy. And so you had the proliferation of more complex banking services there. And it's really about allowing the ownership of gold and ownership of underlying money to move faster than gold itself can move. But really, it was the second half of the 1800s that really opened up the speed of transactions, because you had the invention of telecommunication systems and you had the laying of the undersea cables across the continents. And so from that point, the separation of transaction speed, which was now the speed of light, was completely removed from the speed of physical money, physical settlement. And so for about a century and a half, we've been in this environment where transactions move at the speed of light. It's very simple to do a transaction. It could be done as simple as Morse code. Now we do it differently, whereas actual underlying settlement, got basically dropped away. And what Bitcoin, I think, represents is kind of the ability to do settlement, final settlement, at that same speed of telecommunications, which prior to 2008, 2009, wasn't really possible. And even the underlying technologies that made that happen didn't come into fruition until the years leading up to that. And so I'll stop there, but essentially Bitcoin is just kind of this revolutionary new way to think of money, to send money, to operate with money from the root layer rather than just like an overlay.
Lyn Alden's remarks shed light on the stark reality that many overlook: banks harbor inherent risks. She elaborated on the general lack of transparency regarding the assets banks invest in, which are often undisclosed to the public. Given the ongoing banking crisis, Alden sees Bitcoin gaining favor as a haven for investors. She emphasized the unique features of Bitcoin, such as its self-custody nature, non-dilutable assets, and absence of liability, which are garnering increased attention, particularly during times of economic instability. Alden further explains the use of Bitcoin as a hedge against fiat currencies. Let's continue with the video.
One of the things that the banking system does is it potentially changes forward expectations of how much the Fed will be able to tighten, at least within a certain time period. And so, if you step back a second and you think, okay, with this much debt in the system, with these large deficits, are they able to get to a period of positive real rates and then hold that for a long period of time? And if you have that expectation, then assets like gold or Bitcoin are perhaps less useful to you. I mean, the speed and programmability of Bitcoin is still interesting, but maybe from a safety perspective, you say, well, I'm fine with the banking system, I'm fine with treasuries, I think they're going to maintain purchasing power. On the other hand, if you kind of look in history, generally when you get sovereign debt, and it's not just the United States, it's across Europe, it's across Japan, when you reach these high levels of sovereign debt, like well over 100%, usually those bonds and that cash does not make a very good forward savings instrument on a real basis. Now that can have a big spectrum for how that turns out. Obviously on the extreme end, you can get sharp, very, very sharp currency devaluation, hyperinflation in some cases. In other cases, you just have this prolonged period of financial repression, generally rates below the inflation rate. Sometimes they go above the rate, but sometimes they come back down, and they spend often more than half their time kind of below that level. And so right now the Federal Reserve's kind of in this trade-off of trying to get, as of now, they've kind of gotten back to, positive real rates on a trailing basis. But it's come at the cost of financial instability. And so you're kind of going back and forth between where do you want to hold your money, and then the money itself, is it going to hold value over, say, a 10 or 20-year period? It could certainly be very useful for periods of time, but it's like, is this something you want to store your energy in, or do you want to go elsewhere? Do you want to go to equities? Do you want to go to commodities? Do you want to go to an asset like Bitcoin? And so I think that's one of the questions that people are looking at. And then when we tie it into the potential de-dollarization, the somewhat diversification of reserve practices and payment systems around the world, one way to look at this is that money is essentially a ledger. And so for the past 50 plus years, the world's been really reliant on the Federal Reserve as kind of the ledger for the whole world. There's all these other central banks, but they themselves tie into the Federal Reserve, and they tie into the U.S. Treasury system by holding assets, connecting themselves to that ledger. And as we see kind of islands form, or as we see kind of a multipolar world in terms of all these different ledgers kind of competing with each other, an open, distributed global ledger like Bitcoin, I think, becomes pretty interesting.
Lyn Alden's statement on April 1, 2023, sparked a Twitter discussion, suggesting that Ethereum might be classified as a security under the Howey test. Alden highlighted the distinctions between commodities and securities, focusing on centralization disparities and potential legal consequences. The dialogue began with Alden stating that securities rely on a team of salary developers, unlike commodities. Erica Wall emphasized the importance of asset categorization, particularly for status views. Alden further explained her viewpoint, stating that her focus on centralization aids in predicting legal repercussions, without expressing her personal opinion on securities regulations. When asked about Bitcoin, Alden responded that it doesn't fit into any current security definitions. The debate took a playful turn when Real Vision CEO Raoul Pal questioned if Alden's stance on Ether's classification was an April Fool's prank, but Alden clarified her serious take. She believes Ethereum is likely a security under the Howey test but doesn't advocate for any specific action. The discussion also touched on the jurisdictional tussle between the Commodity Futures Trading Commission and the Securities and Exchange Commission regarding Ethereum, leading to uncertainty about its final classification. Additionally, the introduction of the BRC-20 token standard in the crypto world, particularly amid the recent meme coin craze, has garnered attention and favor. However, the token standard still faces constraints and requires more use cases for widespread adoption, as highlighted in a report by leading crypto exchange Bitfinex. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.